Hey everyone, welcome to second part of the stock fundamental analysis of L&T Technology. In the first part, we covered the business of the company and its leadership. If you haven't watched the first part, then I would strongly recommend watching it before you start the second part. Now in this video, we will discuss the future growth prospect, key risk, competitor analysis along with financials. Alright, let's get started. If you look at the future growth prospect, each of the 6 growth areas of L&T Technology has a very bright growth prospect. 25% of all the cars in the world are estimated to be electrical by FY25. That's a huge market. Then MedTech, which is medical plus technology, is expected to have a market of $200 billion by FY25. 5G is expected to have a market of $155 billion. AI and digital products are expected to have a market of $100 billion. Digital manufacturing is expected to have a market of $475 billion by FY25. And sustainability is expected to have a market of $400 billion by FY25. Just imagine the kind of growth opportunity L&T Technology has in these areas. There is a rapid on-ground shift towards vehicle electrification, smart manufacturing practices, digital products and solutions, state-of-art healthcare options, streamlined connectivity, and a sustainable approach to business operation. These key trends will help shape the global engineering R&D ecosystem. R&D investment alone are expected to grow by 10 to 20% for over one-third of the leading technology firm as they explore opportunities for innovation and build new products and services to meet evolving customer demand. In EV segment, companies focusing on delivering state-of-art EV technology, telematics and connectivity solution, cutting-edge infotainment system, powertrain design services, and end-to-end design and development of automotive components. In MedTech, companies actively pursuing new avenues to promote digital surgery projects that help ensure faster and more efficient surgery with improved outcomes. L&T Technology is helping drive private 5G network rollouts for global organizations to achieve seamless connectivity and unlock business value. L&T Technology is also helping industry leaders transform their smart manufacturing and operations. Recently, there was a news that L&T Technology has won 5-year deal from BMW Group in infotainment domain. In short, L&T Technology is working on some of the most innovative technologies that will be in high demand for the years to come. Hence, the future growth prospects are very bright. If you look at the key risk, first biggest risk is high attrition. Similar to all IT and technology companies, the biggest risk for L&T Technology is rising attrition. The latest attrition for Q1 of FY23 stood at 23.2%, which is very high. Rising attrition directly increases the talent retention cost and impact the margins of the company, as employee salary and compensation is the biggest cost for IT and software companies. Then second risk is revenue concentration risk. 62.5% of companies' revenue last year was from North America and 16.5% was from Europe. So 79% of companies' business is from US and Europe. This has been a case with every IT and software company. Developed markets like US and Europe are the key source of business, but that creates revenue concentration risk by geography. For example, currently both US and Europe are facing slowdown due to high inflation. Now this might result in global companies reducing their R&D budget and can create a risk for slowdown in revenue and profit growth for L&T Technology. Then third risk is increasing competition. Given the healthy growth prospects in this segment, many IT firms have forayed into the engineering service business in last few years, resulting in increased competitive intensity. Due to the increasing competition and resultant pricing pressure, the ability to introduce new innovative products and platforms will remain extremely critical to maintain competitive advantage. Now, as far as direct competitors are concerned, there are 2 listed competitors in India, Tata Elxsi and KPIT. If you look at the business of all 3 companies, Tata Elxsi caters to 3 major categories: transportation, broadcast and telecom, and healthcare and medical device. Then KPIT is a pure play mobility software solution company. So it only caters to transportation sector. Then L&T Technology has its presence in transportation, telecom and high-tech, medical, plant engineering and industrial products. So Tata Elxsi is the direct competitor of L&T Technology with presence in almost every sector where L&T Technology is present. As far as valuations are concerned, Tata Elxsi currently commands a market cap of 54,000 crore with a PE ratio of 87. KPIT has a market cap of 15,000 crore with a PE ratio of 51, and L&T Technology has a market cap of 38,000 crore with a PE ratio of 38. Now you might think that L&T Technology is available at very attractive valuation as compared to other players like Tata Elxsi and KPIT in the sector. But the reason why markets are paying low premium to L&T Technology as compared to KPIT and Tata Elxsi is mainly due to earning growth. In last 1 year, L&T profit growth was 33%, KPIT profit growth was 68% and Tata Elxsi profit growth was 51%. So in terms of earning growth, although all three companies have grown brilliantly, but Tata Elxsi and KPIT have grown faster than L&T. If you look at the profitability, L&T Technology latest ROC is 30.8%, KPIT ROC is 24.1% and Tata Elxsi ROC is 47.7%. Again, in terms of profitability, all three companies have exceptional profitability, but Tata Elxsi has much higher profitability as compared to L&T Technology. Hence, market is giving higher premium to KPIT and Tata Elxsi as compared to L&T Technology. Now let us look at the financials of L&T Technology. Now if you look at the revenue growth of the company, it has consistently grown from levels of 2,619 crore in March 15 to current levels of 6,925 crore in trailing 12 months. Look at the consistent growth in the revenues. Although there was a slight dip during COVID, but again, it is back on track. So overall in last 7 years, there is nearly a jump of 3 times in the revenues of the company. And if you look at the profit growth, again the profits have grown consistently from 311 crore in March 15 to levels of 1,019 crore in trailing 12 months. Again, there's a consistent growth. There was a slight fall in COVID, but again back on track. Overall, if you look at it, in last 7 years, there's a growth of more than 3 times in the profitability of the company. Next, if you look at the operating margin of the company, they have been increasing. If you look at it, it was 15%, 17, 18%. But recently, if you see, it has clocked 22%. So overall, the margins have been pretty good. Next, if you look at the ROE and ROCE, both ROE and ROCE are well above 20% over the last 7 years. In fact, if you look at the latest ROE, it is 24.5% and the latest ROCE stood at 30.9%. So both ROE and ROCE are brilliant. That shows the profitability of the company is fantastic. Next, if you look at the debt to equity, company has literally negligible debt. If you look at over the last 7 years, latest debt to equity is 0.11, which means company is virtually debt free. Next, if you look at the reserves of the company, look at this consistent growth in the reserves. Not even a single year where the reserves have fallen. So that's again a brilliant growth. Now let us look at the shareholding pattern. So this is the shareholding pattern. If you see, promoter holding has been on very high side. It was 74.97% in September 19. Although there's a slight reduction, but still it is 73.88, which is very good. So promoter are holding a very high stake in L&T Technology. If you look at FI's holding, it has slightly reduced. So it was 8.9%, then increased to 9.5%, but there's a slight fall in the shareholding of FI. And if you look at DIS, it was 4.76%, increased to 6.4%. But then it is showing a fall. But I think the representation is not right because if you look at it, in public holding, it is showing LIC that has picked stake in L&T Technology in March with 2.2 and increased it to 2.37. So this actually should come to DIS, which would mean that DIS have actually added L&T Technology share in last 2 quarters. Now let us look at the share price movement of the company. So this is the share price movement of the company. Company had its IPO in 2016. So it's just 6-7 years since company launched its IPO, and it was at 869. Then it increased to levels of around 1700. Then during COVID, it fell down. The share price jumped to as high as 6,000 rupee. However, if you look at last 1 year of movement, from the highs of 6,000, there was a fall of nearly 50%. Although there is a recovery, nearly 23% in last 1.5 months, but if you look at it from the peak, company is still down nearly 40%. So currently it is at levels of 3,636 and trading at a valuation with a P ratio of 37.84. Overall, the company has very strong financials with good earning growth, high profitability and negligible debt. And company is currently trading at levels of 3,650 and L&T is trading 40% down from its peak. I think that at a current PE ratio of 38, L&T Technology is looking reasonable. The future growth prospects for the company are very bright, and as compared to that, the valuations are very reasonable. That means it is worth adding L&T Technology at current levels. And it may also happen that due to slowdown in North America and Europe, there could be some impact in the growth in near term, which could eventually impact the share price negatively. But every dip in L&T Technology from current levels would be worth adding in a systematic manner for long-term wealth creation. So this is it for this video. I hope you got a good understanding of future prospect, key risks, competitors and company financials. I'll see you next video. Till then, take care.